The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good day, Money Masters and Treasure Hunters. Welcome to November 18th. Terrific Tuesday edition of Hour 2 of the Trader's Edge. I'm your host, Steve Rhodes, and I hope that each of you are off to a great start of your day. Let's make sure that you and I do everything in our power to have just simply a terrific Tuesday. We should always remember that what is talked about, well, that's a dream. What's envisioned becomes exciting. What's planned becomes possible. What's scheduled, that is... well, that just simply becomes real, and I want to thank you for scheduling your morning with me out here. I'm grateful for your presence, and I'm here to serve you. That means you can be called 877-927-6648 internationally. Our number is 727-445-1044. Remember, if you've got a question, someone else has that exact same question. I can assure you of that. So don't call in for me. Don't call in for yourself. Make it just simply a daily random act of kindness out there. And that is the way to live out there, folks. It is Terrific Tuesday here at TFNN. It's even more terrific. You know, this is the age of Aquarius, the fifth dimension, because if you're watching this on Tiger TV, you're going to notice a whole new dimension out there, and that is HD TV streaming live to you. You'll be able to see our charts clearer and crisper than you ever have out there. So thank you to Tom O'Brien and the team at TFNN for taking us to that next level out there. There is nothing like it. This is TFNN. I'm Steve Rhodes, and welcome to the show right now. We've got the Dow. She's traded up 40 points, getting in on some of the action that led off over in Germany last night. That party, they're up 147 over in Germany in the DAX out there. The Dow's up 40 points, trading at 17,688. S&P up about 8 points, trading at 2,049. Composite up 29 points, trading at 4,700. Russell up 10 points out here. She's trading at 1174. Goldilocks is up $11. Silver's up 14 pennies. Light sweet crude is back 80 cents out here. Leading the charge the upside, you got Actavis, Regenerate Pharmaceuticals, Amazon, Illumina, Tesla, the IBB, the biotech sector on a charge. Bit Auto Holdings up another 5% here this morning. She's going after her high volume swing point high to the downside. You've got Omega Protein. That's off 16%, so well off its session lows. Alibaba down a couple of bucks. Urban Outfitters down a couple. Wynn Resorts off $1.86. IBM off $1.35 out here. We'll take a look at that for sure. TGX companies down $1.30. Again, 877-927-6648. Let's go take a look at what's going on inside of the markets. Let's go from short term to long term. Let's start off with the Nasdaq, because it was the Nasdaq yesterday that gave the first potential change in trend signal. Let's start with the 30-minute chart. We'll go look at the 30-minute, 120, the 300, and the daily, just to get a feel for what's going on inside of the Nasdaq. Now, as we take a look at the NQ out here, and I know you're watching us on time. Hey, if you're listening on the radio or your mobile device at tfnn.mobi, switch that mobile device over to watching the live stream. Go over to the homepage at tfnn.com. Upper right-hand side, you'll see a little button that says Watch Tiger TV, on your mobile device. Click on that so you can see these beautiful charts here streaming off to you. There is a moving average line that I've got drawn on my chart. That is this black line here on the 30-minute chart, which what you will notice as I pull this back, let me just actually, instead of making it more scrunchy, why don't I do this? Why don't I unscrunch it just a little bit, and I'll just pull the chart back so you can see that moving average line. That moving average line has acted as support really all the way since the lows back here in October. Oh, come on, don't tell me that. You're going to see some of the funky messages that show up on my screen as well. So this is a moving average line that has been out here, that has acted as support since we came off the lows back on October the 16th out here. In fact, once price really got above it, which was, looks like on August the 23rd out here, it has acted as really good support. Well, that's really what it did here yesterday as well. So even though the NQ gave us a bit of a warning sign as we were coming into the close yesterday afternoon, If we took a look at the NQ futures, and I'm not saying you need to trade the futures, but this gives you a better picture as to what is really going on inside the market. We saw that level get pierced yesterday morning. Well, this is on the 17th. Yeah, on the 17th it got pierced. Some potential trouble in River City, but you can see how this area here is acting as support. Even this morning at 6 a.m., price came down, formed a little hammer candle as it was testing that level of support out here, a little doji candle at 7 o'clock, and it's off to the races, trading out at 42.39 as we speak. Looks to me like it's got higher to go. In fact, if you just take a look at just the small A to B equals CD pattern out here, let's go take a look at that. We'll use as our A point out here, this low at 12 noon, in that 12 noon hour. That was on... Well, I'll come back and take a look at the date. That's your A point. Your B point out here, 2 o'clock in the morning. That's on November 18th. That is today. That's this morning. You can see that price has now made the 1 to 1.272 A to B equals C. They're very close to it. 42.40 is the 1 to 1.272. This has enough energy as we speak right now where price could get up to 42.51 inside of the NQ, just simply based on that nice candle, wide-ranging bar during this 30-minute session here from 9:30 to 10 a.m. And it's got some pretty decent volume behind the move. So 42.51 in essence is what this chart is suggesting we could see on a 30-minute time frame inside what arguably would be one of the weaker of the indices, just simply because of the lack of energy and oomph that it had in its covers yesterday, under the covers, I should say. If we take a look at the 120-minute time frame, let's see what kind of picture we have here. 120-minute time frame, let me just update this. It had been moving higher with less relative strength out there, but it looks like it may have resolved itself during this time period here. Yeah, so even that pattern, we've seen that the price has really been traveling in a little sideways box out here. That sideways box, that consolidation pattern inside the NQ, that the latest consolidation really taking place from about the time period and price point on November the 13th. Here, November the 17th, the price low there, right around 4,200. We'll use as the bottom of the consolidation. So 4,200 to 42.30, we'll just call it. So you got about 30 points, so add 30 points to 25, you're at 55. So 42.55. How did that look with regard to the 30-minute 1 to 1.618? 42.51 out there. So now we've got a couple of patterns. I would suggest that ought to be the target area, that 42.50-ish range. We look at the 300-minute chart out here, get a feel for what's going on. 300-minute chart says maybe it's in your 6th out of 7 potential wave counts to the upside, but breaking above resistance at 42.19. Now, this candle here doesn't close until 2 p.m., so the 5-hour chart has a long way to go, but nonetheless, we have not seen a break below a market profile low inside of the NQ on its 5-hour chart ever since it began that move up off of the bottom back in October the 16th. So that's really a key area inside of the NQ, 41.95 being that very key level there, using a 5-hour energy chart out here. We do want to take a look at energy. We take a look at the daily chart. Daily chart, what does that show us here? You know, it shows a rising price channel, but I'd never get too enthused when the way that you break a channel, either to the downside or the upside, in this case here, it's a rising channel to the upside, was just simply by a move sideways. Price could just simply get up to test the top of that channel and still reject it. We'll pay attention to that. That's on the NQ on the daily. So that's the daily. That's the daily, the 300, the 120, and the 30. Let's go to Marv in Bedford, Massachusetts. Marv, thanks for calling. Thanks for holding. How are you doing today?
Excellent. So I made some money on TZA. It's going back over a month now, I guess. And I'm wondering, I want to re-enter a long position, but I'm looking at the IWN, and I've been hoping for it to actually hit its high. And it keeps on staying close to them, but it's not made its high. Do you think I should wait until it does something at this point, or could I enter the TZA?
Marv, which high is it that you're looking at? So let's make sure we're speaking the same language out here. So when you say you're waiting for it to hit its high, is that the high from a few days ago, or are you looking for the highs back in like July?
I'm looking for July.
July size. Okay. And at that stage, you were looking for the IWM to hit those highs before you would take a short trade?
Go back into I've shorted it a couple of times and made money on it, and I just don't know if it's going to make it there.
Absolutely. Absolutely. Okay, so let's look at let's break the IWM down for you. I just wanted to make sure that I was looking at what I wanted to make sure that I was clear on what you were looking at. That way I could provide you with the right information out here. So I want to start off with the IWM and come and take a look at a weekly chart out. A signal, that should be a signal that the testing to the upside could be done. So if you were going to enter a short trade, I would say that what you don't want to see the IWM do this week is close inside 117.83. Light volume or not. And the reason that I say that is because if it does close inside there, it's likely to run to the top of that consolidation box, being in that 120.97, 120.58, somewhere right in that range. So I would use that as your first level to make a determination whether you were in the right trade or not. Okay,
so in other words, that'd be almost like a weekly stop that I can look at. I mean, I can keep a trailing stop in it, a daily. But yeah, this index is weak, and I'm not. I know it's made up of all kinds of small caps. So I've been successful in the trade. So you give me some great parameters. I really appreciate that.
Yeah, I'll give you a few others if you want. So use that. I point that out because sometimes what we'll do is we get so focused on a daily chart that we forget to go take a look and see what the air's like up above. And so inside the IWM, and the other important aspect of the IWM is we've got two doji candles in a row. And dojis have more meaning at resistance, which is what occurred here last week. So you've got a doji candle which says that the market is tired. That's what really you've pointed out. The market is tired. But you close back inside there, and I say price are going to go test the highs out there. Now, if we switch back to the daily aspect of it, what the IWM did was it also had a key reversal session. Marv, you want to wait through the break here, or?
Yeah, definitely.
Okay, so we'll come back. We'll take a look at Marv. We are, as Tommy likes to say, we bisect and dissect the Russell 2000, the IWM. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 27, S&P up 7, Composite up 26. Russell's still holding up 10 points out there. And we're on the line with Marv from Bedford, Mass. Now, Marv, it was a little cold at 5:30 this morning when I walked outside here in Florida. What's the weather like up there?
Well, it's cold, but the bottom line is, it's just part of living in the Northeast. You get used to it.
Are you a native of that area?
Yeah, actually, I live in Bedford, New Hampshire, and my family's been here like 20-plus. I've been here 20-plus years, but my family in general has been here 250 years. So.
Wow. Okay, that's cool. That's very cool. Very cool. Hey, let's take a look at the IWM. Now, I want to take a look at a couple different areas for you because there are patterns here that are somewhat similar. Back on the trading session, I'm going to go back to September 3rd. On September 3rd, 2014, when the IWM had made a high of 117.80, it formed a key reversal session. Now, key reversal session requires three things. Number one, you've got to be in extended condition. And I like to use the relative strength indicator as one of those tools out there to make that determination. Secondly, you need to exceed the high and the low of the prior session, and you just need to close in the opposite direction of the trend that it was coming from. And that's really what took place on September the 3rd out there, and that happened to mark a high. We saw a move lower over the next day, and we saw a little bit of a bounce that took place on September 5th and 8th before the market continued moving lower. That's really, in essence, what it is that we're seeing here right now. And the reason that I bring that up for you, Marv, is that on the trading session here of November 13th, although, again, very subtle, that, too, was a key reversal session. So what we're actually seeing is that the same basic highs out here, swing point-wise, is we've seen two key reversal sessions in this 117-ish area. Now, that swing point from September 3rd had 33 million shares. The first day up there was with 34 million shares on November 12th. And that was a little bit too much volume. Said that the high would be tested again. Well, it was tested on the 13th with 25 million shares. So the weekly has a failure to swing point low with volume, with lighter volume, rejection of that area. The daily has a rejection of a swing point high with lighter volume and gave that key reversal. So if you're going to go ahead and take that trade now, I would just go ahead and set your stop as a close above 118.25. That's that key reversal session from November 13th. And that's how I would take a look at trading it. I would then throw out to you, if the trade works out and you see some kind of retracement, and your retracement inside the IWM, if this trade were to work out for you, you really start to need to gauge things at about 112.63. That cat bounce, not much of a retracement out there. I recognize that, but we may not get a ton of retracement inside the market. If we break through that level and volume is accelerating, then you can look at the 109.16. But then start looking at the TNA as the trade out there. All right? Because Santa's going to deliver, and it ain't going to be cold this year. It's going to be a nice.
Great, I get it. The Bulls are running, so.
That the Bulls are running. You bet. Right. Thanks so much for listening. Thanks so much for calling. That was Marv in Bedford, New Hampshire. And we're taking a look at the IWM out there. Now let's go take a look at what's really putting the fuel in the market out here is the Euro-Japanese yen. So, what I didn't mention to Marv, but he'll catch this during this next segment here. To me, this is really the key, because if the IWM is going to make a move lower, right? We've seen some failures at the swing points that we looked at. We looked at the weekly swing point. We looked at daily swing points out there. And so we've got enough signals. Marv is exactly right. We've got enough signals that the IWM is giving us just traditional technical sell signals out here. The one thing that impacts the market more than anything else is liquidity. And the best liquidity gauge out there, in my opinion, is the Euro-Japanese yen. Kind of odd, isn't it? But it's really not. It's all about currencies. It's the carry trade. This is the one that you want to pay attention to. In order for that trade to really work out for Marv, what he's going to need to see, he's going to need to see the Euro-Japanese yen continue to find resistance at this 145.68 level. If it closes above 145.68, what happens in a very liquid market is the liquidity will go into the small caps. It'll go into the Russell 2000. Case in point, let me just make the point for you. Let's go back in, because you can see us now in Tiger TV. You can see even all my small piece of information. Look at what's really leading the charge here today percentage-wise. It's the Russell 2000. It's up 0.7%, almost 0.8%. It's up about 9 points right now. Why is that? Well, I would venture to say the reason is because the liquidity gauge here is actually just flipped over to positive. It's filled up its love tank out there. And that love tank says if you close above 145.68 out here, that it's going to love running higher. And then being in the TCA would not be a good trade. Likewise, if this is resistance, lack of liquidity hits the Russell 2000 more than anything else. This is Steve Rhodes. This is TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With market insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 24, S&P up 6 right now. I have a request to take a look at Activision. So let's go do that. ATVI is the ticker symbol out here. So to take a look at Activision, let's look at a couple of different things out here. Number one, let's look at, this has got a couple of signs of strength out here. One that took place back in July 26, 2013. This thing moved higher with 41 million shares. So you got a nice open gap, a nice sign of strength out there. No big deal. Had another sign of strength out here with 29 million shares. That was back on February 7th. That's one that we're going to focus in on. Now, price never came back and actually closed the gap, which just is another way of saying never came down to the bottom of the breakout level. That bottom of the breakout level would have been right around 17.20. I'm having a little trouble here with my cursor hitting the exact spot out there. So it's 17.20. Had a nice bullish engulfing session as it formed a bottom right here on the trading session October 15th. So just like our market. So one thing, if we take a look at this, this thing made a high out here when on September the 10th, our markets made high on September the 19th. So this is, traveling along with the market out here, I would say. So you want to, also understand that. At this helping candle that's on the October 15th, that top should be somewhere below 1773. The close below that, if you are, says that it actually moved higher on November 5th with 29 million shares. That 29 million shares wasn't going into any kind of a downdraft with substantial volume or anything like that. It was going into the September 17th level that only had 16 million shares. So far, so good. The retracement here that we've seen on this equity, it's really just come back and it's testing this little small sign of strength out here from October 31st. So this equity could easily come and finish that, repair that window by getting to the top of October 30th, which is at 1901. So it's possible that it would pull back to that area. But at this stage here, what the difficulty that Activision may have is that the B point is going to be that November 5th as it gets into that area higher. Now, you're basically in the retracement zone and it decides to move higher out here, then what would likely happen is you'd likely hit a price target around 23.64, 24.67. Now, that's the daily for Activision, ATVI. Let's go take a chart, see if there's any other signals that maybe we might have missed inside of this equity out here. I'll go back to the daily in a minute. We'll just go ahead and put our market profiles up there just to use an additional tool. Now, on the weekly chart, let's see, on the weekly chart, hey, not too shabby. I mean, last week was a nice little sign of strength out there for you, 77 million shares. But and that was, in essence, going into 54 million shares, that little downdraft from September 15th. So it really is suggesting that it does want a higher price out here. In the 1720 area, becomes your level of real support. Now, if volume starts to accelerate to the downside, then you could actually get an A to B equals CD in that direction. That is not what I see inside this equity as we speak right now. If I go back to the daily and I turn on our TAS signal box market profile out here, what we'll also notice is if you take a look at Activision, as was coming off the highs back here in September, we can see how the red lines, that's the resistance level, that's the top of the box inside of our TAS market profiles, how that area here acted as resistance all the way down. Well, that resistance was busted, and that was back on October 30th out here. So that said, okay, we're starting to see a change in trend. Of course, that also means that 1973, which is your market profile low, you'd really like to see that level hold now as support. So as just the opposite of what we saw, where resistance acted as resistance on the way down, now you want to see support act as support on the way up. So that would be the 1973 mark out there. I hope that helps our Tiger, who was looking at Activision ATVI. Best of luck with that trade. Let's take a look at some other things that are... Now, let's go back and take a look. We looked at... we bisected and dissected the WM for... Let's go take a look at the other ETF structures out here. Let's go take a look at the Qs. Let's do that after we look at IBM, which is the number one weighting inside of the Dow. I just want to see what IBM is doing. It's off $1.74, but because of its weighting inside the Dow, it's it's helping to pull the Dow back just a bit. Now, IBM is trading inside. This is a daily chart that we're looking at out here. Here's this little hammer candle, an hour of trading. So it's actually pulling. So the key level to be watching inside IBM is 161.53 or 162.34 right now. But if it closes inside 161.53, it ought to go test 160.05 out there. And you break below that, that's not a good sign. That's a little hammer candle. If you're long, you're wrong when you break a hammer candle. Okay, that's what's going on inside of IBM. Let's go take a look and see what's going on inside of the QQQ ETF. We took a look at the NQ when we began the hour. Now let's go take a look at the Qs out here. So you got the QQQ trading out at 103.40 as we speak right now. Volume here today is 7 million shares. That's after yesterday's volume of 23 and 19. So it's got some pretty decent volume out here today. Normally, the Qs, what associates high inside the Qs is light volume, like the trading session we saw, which had 23 million shares on November 17th or 19 million shares on November the 14th out here. So if, in fact, the Qs can maintain this volume, we'll go take a look at Apple and see what Apple is doing out here, see if we can get any kind of guide, just simply because of the weighting structure that Apple has inside the Qs. I don't know, is it like 11, 12, 13%? It's some fairly high number, so we want to take a look at Apple. When you're trading the Qs, it's like trading Apple. It's only like trading the Apple because there's, at least another 7 equities that make up all combined. Maybe it's another 8 equities on top of that all combined are greater than 50% of the weighting structure inside of the QQQ. But not any kind of wide price spread that we've seen today, but it has some pretty decent volume in here. Where is it that the Qs can head up to? Well, if they decide to continue moving higher out here and they decide to not listen to what Stevie believes, which is that the market is making a high a short-term high wants to pull back, then the Qs will close above 103.24. 103.24 happens to be your 1.272 expansion of your B to C swing point of the eventual A to B equals CD to the upside that it will form. Now, that A to B, that B point, by the way, had 36 million shares, and that B point was passed with 54 million shares. So you do have a confirmed A to B equals CD to the upside. That'll take it to 107.42. I'd have to say 112.09 is very likely where we'll see the Qs trade to come December 31st out here. But right now, it could be saying, hey, I want to take a break today. I guess is that a McDonald's song or something out there? So that's what's going on inside of the Qs. But I did say, let's go take a look and see what's going on with Apple. Apple's up 53 cents as we speak here this morning. Let's go see what kind of pattern we've got here. So the case of Apple has this A to B equals CD. It made the 1 to 2 A to B equals CD yesterday. Now, typically, when you make a 1 to 2 A to B equals CD, the market will begin to change its trend. But no reversal signal yesterday, no candle of any significance yesterday. Small-bodied candle. You've got this upper wick out here that says, okay, it has some meaning, and the meaning there is that the bears or the sellers were really more so in control of that trading session, but otherwise not a reversal signal, and right now moving to just a tad higher. Hey, let's go out to Odessa, to our man, Don. Don, thanks for calling. Thanks for holding. How you doing today?
I'm doing fine. How are you, Stephen?
Excellent. Thanks so much for asking.
I mean, Steve. I didn't mean to call you Stephen.
Stephen's okay. That's the name on the passport.
One of my brother's name is Stephen, so I had him on my mind.
Oh, good. Now, does he use a V or a PH?
PH.
He does. Okay.
I still call him Stephen now.
Okay. You can call him Stefan for me, or
whatever. You know what? I just hate this HD on your screen there. I just hate it all.
You do?
It's just horrible.
Oh, I'll bet. How about that? Is that cool?
No, I got to send a great big old thank you out for Tom and you all for doing that. It's just wonderful.
Yeah, no question that's the the next evolution out there. So pretty exciting day for all of us here at TFNN, for all the folks that watch this on Tiger TV and really be able to see clearly.
I've never been able to see your screens before, and now I can see everything.
Yeah, well, that's great. That's great. You're looking at the GDX, I believe. Tell me what you're doing, how I can assist you.
Well, I spotted the potential for a small bearish Gartley here, spanning from the 8th of October. Is that the 8th? Yeah, sure is the 8th of October, all the way through today. I wanted to know if you placed more emphasis, which you placed more emphasis on. We've got a good long bar with good high volume on the 7th of November. And we've got another big long bar that surpasses that one, but with less volume. So my thinking, what I think I learned from you was that a Gartley has to have less volume on the C to D.
Well, it's a great spot for you. And folks, what I've done is I've drawn that little Gartley pattern on the screen that Don is referring to, and he's coming off of the swing point here from October the 8th. And so if we take a look at that, you can see the A to B equals CD that he's spotted. It's just made a nice 0.618 retracement at that stage. What I would say, Don, is that every single A to B equals CD pattern or any other pattern that somebody might trade, the key to a reversal isn't that the pattern formed. The key to a reversal is that you've got a bearish reversal signal.
Yeah, I know that. I was going to wait for that.
Yeah, and I think that you're looking to take the short side of the GDX trade.
Yeah, I was actually.
Okay. I think you've really got to wait for a reversal signal, or let me see what else. What else are you looking at? What else are you spotting out here that maybe, because you've taken a closer look at this than I have at this moment?
We haven't done the 0.78 retracement yet. We're only at, I think it's 618 right now.
We are. Yeah. That B point, which had 136 million shares, was taken out with 110 lighter volume. So, yeah, you've got a little potential Tiger Gartley that is setting up. Let's take a look at a couple of the stocks, a couple of the key stocks inside of the GDX. That might be the next place where. Excuse me.
before we go on to that, my specific question was, let me go back to my chart here so I get the right dates.
Yeah.
Would you place more emphasis on the higher volume and smaller bar on the 7th, or on the longer bar and the lower volume on the 14th? Or does that matter to you?
It's more emphasis from what standpoint?
Well, for it to be a deciding factor if we are approaching a Gartley here. And I know we don't have the confirmation yet, but would you look at that? Because we got lower volume on the C to D leg. It seems to me like it would be okay, but we've got a bullish engulfing there too, with pretty good volume.
Yeah, the GDX is so. I'm going to answer your question. You said, which would I place more emphasis on? I would place. They're both really. They're both really bullish signs, because the volume on November 14th, you're gauging that against that as a B point from November 7th. So I get that. I understand that. But what we also really had was you had accelerating volume over the three trading sessions, November 12th, 13th, and 14th. And so to me, volume was accelerating through there.
Okay.
It didn't close above that B point with volume. So you're absolutely right. This is a textbook Tiger Gartley potential Tiger Gartley sell pattern. It's missing that signal out there. And so what you'd really want to do is go down maybe to a shorter term time frame, to get some type of better feel, for what might be happening. That just kind of screwed things up, me trying to go to a 10-minute time frame. But what I would really do as my next move in trying to evaluate the overall move would be to go take a look at some of the top, because the GDX 10 equities represent more than 50% of the weighting in there. And
Yeah,
I'd really want to understand, like, what's going on. Gold Corp, I think, is like 13%, 11, 12, 13%. And so I'd really want to understand, hey, what's going on with Gold Corp? So in the case of Gold Corp, GG being the ticker symbol, right now.
Pitiful. I own that one.
You do? Okay. So, right
hey, listen,
now.
I've got to run here. I got one of my accounts on the phone.
Hey, no problem. Hey, thanks so much for calling, Don, and thanks so much for mentioning Tiger TV and just the clarity out there. Have a great day. That was Don in Odessa, Florida. And, folks, if you are listening on your radio or your mobile device at tfnn.mobi, today's the day. Tune in. Go to the homepage at tfnn.com. Click on that button out there to watch Tiger TV on your mobile. You'll just simply be blown away. It is a beautiful thing. 877-927-6648. Steve Rhodes, TFNN. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. When you first learn something in life, you have the most questions as you begin to apply that knowledge, which is why Steve Rhodes came up with the idea for his 7-week trading program. It all begins Saturday, November 22nd, when Steve Rhodes will host a live 3-hour morning workshop where he'll teach his attendees the precise methodology he uses when placing trades. You'll then receive 6 weekly updates each Monday morning discussing the possible alerts currently setting up in the market. Steve will then bring everyone back together for a final 3-hour live workshop Friday, January 9th, where he'll discuss the methodology that went into each of the 6 weekly updates, making sure that you're confident in applying what you've learned so that you can begin navigating the market on your own. You can sign up right now for this entire 7-week trading program with Steve Rhodes for a one-time payment of only $395. If you're a Mastering Probability subscriber, then you can save an extra $100 off that price. For all the details, visit the front page of TFNN.com right now.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's up 22, S&P up 6, Russell up 7.5. And, if you are like Don, who has learned to master by taking one of my couple of my workshops out there, if you, too, would like to really understand the Gartley buy and sell patterns, the butterfly buy and sell patterns, the A to B equals CD, other tools that I use out there, it's not just one thing to identify the price level of where the pattern sets up. If you want to, there are some nuances that just simply, what I was so amazed in my overall process. I've always believed you can't touch someone unless you've been touched. And what does that mean? That means, if you don't have any frame of reference to come from, how do you really can't, how can you, if you haven't never really lost anything, how can you best help somebody experience what they're going through when it comes with loss or things of those sorts out there? And so, what I can tell you is I can touch you from a trading standpoint and provide you with just these small little nuances that make all the difference in the world out there. So we've got the 7-week trading course begins here this coming Saturday. It's the 22nd. It's from 9 to 12. It's going to be a follow-up on January the 9th. And in between that time period each week, I'm here to work with you. The whole goal is to impart upon you knowledge so that you can do this on your own, just like Don in Odessa has done. It's really, the best reward is being able to help individuals. We all have things in common here, is to help our fellow man and woman be able to do all of this on our own. I know that's what each of us here at TFNN want to be able to do, and it takes a unique person who wants to actually do that. Most people want to just be, in essence, told what to do, and that's cool because it's just simply the aspect of time. So I totally get that. If you are a person that you really want to understand what the market is doing, what you should be doing, how to read the message of market, well, then this 7-week course is for you, because what I will do is I will maximize your time. You will learn so much in just this short period of time because it just really gets to the point, and I just simply make sure that you understand the concept, and we'll go back and we'll take a look at a number of different examples so that you know that light bulb goes off, because there's nothing like a light bulb going off. So join me this coming Saturday. All the details on the homepage of TFNN.com. It'll be a great experience out there. As far as what to take a look at for the day out here, areas to watch at this stage here. We talked about the New York Stock Exchange earlier. Had pretty decent market breadth. Right now, the market breadth has just slipped to maybe about a 2-to-1 level as we speak. 1,900 advancing issues, about 1,000 declining. So we're pretty much at 2-to-1 versus 3-to-1. So watch the New York Stock Exchange. It only needs like 150 or 60. Let me give you the actual number out here, see if I can pull that up real quickly. It does need that much in the way of net declining issues, so we want to watch the New York Stock Exchange out there, because that would be the next one to slip into, hey, I'm ready to take a break out there. The actual number of issues it needs is 191, so 191 or more net declining issues. We're not there yet, but at the end of the trading session, that's something that you want to watch for. You'll want to watch the VIX index as well. Of course, it's below its 50-day exponential moving average out there. We covered that earlier. So that's if it did slip above that. Most of you probably don't track and watch the euro, Japanese yen, but it is worth noting, and it is worth watching out there. Any close above 145.68, that bodes well for the bulls, and any close below that bodes well for the bears out there. So stay tuned, folks. It's been great to be with you in HD, and so appreciative to Tom and the group for being able to spend a lot of hard work on there and to pull all this off. So no small task out there. Stay tuned. Basil Chapman is up next, and have a great Tuesday, folks. Take care.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.